What if I told you that the secret to wealth isn't working harder, but making your money work harder than you ever could? Imagine buying when everyone else is selling and selling when everyone else is buying. Sounds risky? It's actually the cornerstone of building lasting wealth. And what if ancient Stoic wisdom could guide your investment decisions, helping you stay calm and focused when the market is in chaos? Welcome back to the channel. Today, we're diving deep into the mindset and methods of the wealthy, how they grow their income effortlessly by making money work for them. But this isn't just about cold numbers or complex formulas. We'll blend timeless Stoic philosophy with modern investment strategies to help you build wealth with clarity, resilience, and purpose. Wealthy individuals share a mindset that most people overlook. Money should do the heavy lifting, not you. While many settle for saving a little here and there or dabbling in basic investments, true wealth builders harness smart, sometimes counterintuitive strategies to multiply their capital exponentially. Let's walk through 10 proven strategies that turn ordinary money into powerful wealth-generating machines. Number 1. Master market timing and contrarian investing. Stoic philosopher Seneca once said, "Luck is what happens when preparation meets opportunity." Successful investors embody this by seeking opportunities when others panic. This is called contrarian investing, buying when prices are low, even if it means going against the crowd, and selling when markets are euphoric. Take Warren Buffett as a real-life example. During the 2008 financial crisis, while many fled the markets, Buffett invested billions. Why? Because he saw panic as a doorway to long-term wealth. The strategy demands both deep research and emotional strength. Most people buy high and sell low, driven by fear and greed. Wealth builders, however, keep cash ready during good times and jump in boldly when others are scared. Number 2. Harness algorithmic and quantitative investment strategies. In the digital age, data is king. Stoicism teaches us to remove emotion from our decisions, focus on what we can control. Algorithmic trading does exactly that. It uses mathematical models to find investment opportunities humans might overlook. Today, even individuals can access these strategies through robo-advisors, which analyze vast amounts of market data and make systematic trades, often for just a small annual fee. By letting data guide your investments, you avoid emotional pitfalls and stay disciplined, a principle the Stoics would certainly endorse. Number 3. Exploit the power of compound growth. The third strategy wealth builders swear by is harnessing the extraordinary power of compound growth, often called the eighth wonder of the world. Compound interest is the secret engine driving true wealth accumulation. Simply put, it means your money doesn't just grow, it grows on itself, accelerating exponentially over time. This principle aligns beautifully with Stoic philosophy, which teaches patience and long-term vision. Seneca once reminded us, "It is not that we have a short time to live, but that we waste much of it." Similarly, wealth builders understand that time is the ultimate ally. The longer you allow your investments to compound, the greater your returns become. Consider Warren Buffett and Berkshire Hathaway. Buffett's success is a testament to compound growth. Profits are reinvested year after year, allowing gains to snowball into extraordinary wealth. This is not about chasing quick wins, but committing to steady growth, no matter market distractions. Wealth builders avoid the temptation to cash out early, knowing that interruptions stunt compounding's potential. Instead, they prioritize investments that can grow uninterrupted over decades, echoing the Stoic pursuit of tranquility and focus on what can be controlled, the passage of time and consistent effort. In everyday life, this means starting early, even if your contributions seem small at first. The magic happens not in leaps, but in consistent, steady increments. It's the patience to let time and discipline work together that truly builds financial freedom. Number 4. Pursue asymmetric risk with investment opportunities. Among the 10 powerful strategies wealth builders employ, One stands out for its boldness balanced by wisdom, pursuing asymmetric risk. This approach means seeking investments where the potential upside far outweighs the downside. A small loss here can be offset by a massive gain elsewhere. This principle is at the heart of venture capital and early-stage investing, where a single home run can cover multiple smaller losses. Stoic philosophy teaches us to embrace uncertainty and remain resilient amid setbacks. As Marcus Aurelius once said, "The impediment to action advances action. What stands in the way becomes the way." This mindset perfectly fits asymmetric investing, where patience through failures eventually leads to great rewards. Wealth builders often dedicate only a small portion of their portfolio to these high-risk, high-reward opportunities. These might include startup ventures, small-cap stocks, emerging markets, or strategic options trades. The key is clear: never bet more than you can afford to lose completely. By managing position size carefully and diversifying within this category, they protect their overall financial health while leaving room for potentially life-changing returns. This disciplined approach requires emotional strength to weather failures and steadfastness to wait for the rare, outsized success that can transform a portfolio. Elon Musk's early investments in SpaceX and Tesla, for example, reflected asymmetric risk. Despite near failures, the enormous upside reshaped industries and created wealth beyond traditional expectations. Similarly, Stoicism reminds us to remain steady and prepared for ups and downs, focusing on what we can control: our decisions, patience, and resilience. Number 5. Build self-operating money machines. In the journey of wealth building, few treasures shine brighter than passive income, the art of creating money-making systems that operate largely on their own. These self-sustaining machines might be rental properties managed by reliable teams, dividend-paying stocks quietly growing in the background, royalties from creative works, or automated online businesses serving customers 24/7. Yet, passive income is far from effortless at the start. As Seneca reminded us, luck is what happens when preparation meets opportunity. The initial groundwork, whether it's researching real estate markets, securing financing, or developing a digital product, requires patience, focus, and a strategic mindset. But once these systems are set up and maintained thoughtfully, they produce steady cash flow for years, even decades, freeing the builder from the daily grind. It's important to understand a common misconception: passive income is not no work income. It demands upfront effort and ongoing care, like tuning a finely crafted instrument. But the payoff is undeniable: returns that far outweigh the time invested, allowing wealth builders to expand into new ventures or simply enjoy the freedom to live life on their own terms. Number 6. Strategically leverage other people's money. Another cornerstone strategy lies in the wise use of leverage, borrowing money to invest in opportunities that yield greater returns. When done with discipline, leverage is like a force multiplier, amplifying wealth without requiring all the capital upfront. Real estate offers a clear example. By putting down 20% on a property and financing the rest, investors can control assets worth 5 times their initial investment. If the property appreciates and rental income covers mortgage payments, every dollar borrowed becomes a tool for building lasting wealth. However, the Stoics remind us of balance and prudence. Marcus Aurelius said, "If it is not right, do not do it. If it is not true, do not say it." Excessive borrowing, as seen in the 2008 financial crisis, brought ruin to many who lost sight of manageable risk. The lesson is clear: keep leverage conservative, maintain cash reserves, and ensure returns consistently exceed borrowing costs. Leverage, when handled with wisdom, becomes an elegant dance balancing risk and reward, control and opportunity. Building passive income and mastering leverage lay a strong foundation for lasting wealth. These pillars create a steady flow of growth, allowing financial freedom to take root in a complex world. Next, we explore diversification, the art of spreading risk and multiplying opportunity while embracing the Stoic ideal of balance amidst life's unpredictable tides. Stay with us. Number 7. Create valuable intellectual property assets. One of the most powerful and scalable paths to wealth lies in intellectual property. Imagine creating a book, an online course, a piece of software, or a unique patent once crafted. These assets can be sold again and again without the constant cost of production. Unlike physical goods, which demand repeated manufacturing and shipping expenses, intellectual property flows effortlessly, multiplying profits with minimal additional effort. Marcus Aurelius taught that the impediment to action advances action. What stands in the way becomes the way. For creators, this means transforming ideas into tangible assets requires patience and testing. Successful wealth builders start small, launching minimal viable products to validate the market before diving deep. This careful approach avoids wasted effort and sharpens the path to success. Protecting these creations is crucial. Copyrights, patents, and trademarks become the shields that guard a creator's legacy, ensuring the value built is theirs alone to reap. This blend of creativity, strategy, and legal wisdom turns ideas into enduring sources of income and influence. Number 8. Execute leveraged real estate investment strategies. Real estate investing is a classic yet dynamic tool for wealth multiplication. By leveraging small down payments, investors control significant assets, from duplexes to sprawling apartment complexes and commercial spaces. This strategy allows one to think big, amplifying returns far beyond the initial cash invested. There are many avenues to explore in real estate. Direct ownership offers control and potential high returns, but demands active management handling tenants, maintenance, and market shifts. Alternatively, real estate investment trusts REITs provide exposure with the ease and liquidity of stock trading. For those seeking larger projects without day-to-day involvement, real estate syndications offer a way to join forces with professionals managing major commercial developments. Stoicism teaches the value of understanding what can be controlled and accepting what cannot. Real estate success depends on deep knowledge of local markets, careful evaluation of management costs, vacancy risks, and economic cycles. Interest rates, too, play a pivotal role, affecting financing and timing. Mastery here comes from blending careful analysis with adaptability, balancing ambition with caution. Number 9. Access private equity and venture capital opportunities. In the realm of wealth building, private equity and venture capital offer a unique gateway, one that often yields higher returns than the public markets. These investments allow access to companies during their most transformative growth stages, long before they become household names on stock exchanges. However, this opportunity requires patience and significant commitment, sometimes locking capital away for 7 to 10 years. As Seneca wisely observed, it is not that we have a short time to live, but that we waste much of it. The same applies to capital. Patient and deliberate deployment, rather than impulsive speculation, often brings the greatest rewards. Accredited investors traditionally held the keys to this world, but today's financial innovations are democratizing access. Through crowdfunding platforms and pooled funds, even retail investors can now step into private markets, broadening their horizons without needing millions upfront. The key to success in this space lies in understanding the illiquid nature of these investments and embracing the long view. Much like the Stoic who remains unmoved by fleeting events, the savvy investor remains steady, knowing that true growth often requires time and discipline. Number 10. Capitalize on market arbitrage opportunities. Arbitrage, profiting from price differences across markets, has long been a favored strategy among seasoned investors. While advances in technology and market efficiency have eroded many traditional arbitrage chances, new forms continue to emerge, especially in dynamic fields like cryptocurrency and currency exchange. Marcus Aurelius taught that the impediment to action advances action. In investing, this means challenges like increased competition and technology-driven transparency push innovators to discover fresh, nimble opportunities. Whether it's spotting price gaps between crypto exchanges or exploiting merger-related discrepancies, modern arbitrage demands speed, precision, and deep market insight. Though individual profits per trade may be modest, with enough capital and swift execution, these small gains accumulate steadily over time. The strategy is not about striking it rich overnight, but about consistent, low-risk returns mirroring the Stoic ideal of steady progress rather than reckless leaps. The foundations of lasting wealth. These 10 strategies form the bedrock that sets true wealth builders apart from ordinary investors. Each approach, whether it's creating intellectual property, leveraging real estate, venturing into private equity, or seizing arbitrage opportunities, requires not just capital, but careful knowledge, patience, and a steady hand in managing risks. As Epictetus taught, wealth consists not in having great possessions, but in having few wants. This reminds us that building wealth is not merely about chasing endless gains, but about cultivating discipline, wisdom, and balance. Successful wealth builders don't rely on a single method. They weave multiple strategies together, crafting a diversified portfolio that can adapt and grow through different market cycles. Yet, mastering these strategies is not a one-time event. It demands constant learning and the courage to act decisively, tempered by humility to seek guidance when needed. Warren Buffett often emphasizes the importance of knowing your circle of competence. Start with what you understand well, then expand. Gradually, this mindset aligns perfectly with the Stoic principle of focusing on what's within one's control and accepting what isn't. Remember, with every new tool added to your financial toolkit, the potential for growth rises, but so do the challenges. The wise investor moves forward deliberately, building strength over time. The journey of wealth is a steady path, not a sprint. These 10 strategies are not just tips, they are principles rooted in patience, discipline, and thoughtful action. Wealth building isn't about quick wins or shortcuts. It's about steady, intentional steps that create lasting value. Remember, real growth happens when knowledge meets action, and resilience meets time. By embracing these strategies, you're not just growing your income, you're crafting a life of financial freedom and peace of mind. So take these tools, apply them wisely, and let your wealth grow effortlessly, step by step. Because true prosperity is a journey, a race. Thank you for watching. If you found value in these insights, don't forget to like, subscribe, and share. Stay tuned for more wisdom to empower your journey.